welcome to the Business Standard Morning Show. I'm Nazia Iqbal, and here's a look at the stories for the day. After the Galwan Valley clash about 3 years ago, ties between India and China had hit a new low in decades. But trade between the two countries touched an all-time high last year. In our first story, we talk about how trade between India and China is shaping up amid strained ties. Chinese suppliers of Apple have reportedly been given preliminary clearance to form joint ventures with Indian companies. China's popular fashion brand Shein is also re-entering the country. So are Chinese firms back in business in India? Tushar Verma does a reality check.
The year 2020 was challenging for India. It saw a nationwide lockdown triggered by COVID-19 pandemic and a border clash with China. The skirmish at Galwan Valley took place in June 2020, straining ties between the two countries. The impact was felt across trade and economic relations among the two Asian giants. The Indian government banned more than 200 Chinese mobile applications, which included popular mobile games like PUBG. The ban was implemented citing national security reasons. Over the next few years, several Chinese companies faced trouble conducting business in India. Chinese telecom companies ZTE and Huawei were conspicuously absent from the 5G trials in India before the auctions. For the infrastructure development of the 5G network in India, the government had asked Indian telecom companies to partner only with trusted sources. Huawei and ZTE have not been able to back the trusted tag so far. In 2021, Alibaba sold its stake in Big Basket to Tata Group. More recently, it sold its investment in Paytm as well for $167 million. In FY22, India received foreign direct investment of $58.8 billion. Singapore and the US are the top two countries in the list of top 15 nations from where India received the highest annual FDI inflows. Notably, China was absent from the list of top countries. In 2022, proposals of 382 Chinese companies were reportedly pending with the Indian government. Only 80 of them were approved. However, things appear to be turning around. Vodafone Idea recently placed a 200 crore rupees order to ZTE for its broadband equipment technology. This is in spite of the fact that ZTE is still not a trusted telecom partner in India. Popular fashion brand Shein, known for its affordable products, is also re-entering the Indian market. This is through a strategic partnership with Reliance Retail. It is noteworthy that Shein has made one of its Singapore-based subsidiaries the de facto holding company before entering the partnership. This may have allowed the Indian government to view it as a non-Chinese entity. So, is this return of Chinese companies a company-specific development or an emerging phenomena?
The stance of the government has not fundamentally changed when it comes to China. The recent deals are structured in a way which proliferates localization. We can see this with norms around data privacy via storage of data on local servers with no access to the Chinese counterparts, or even ownership and control of the entity within Indian firm. In our opinion, the approach will be company specific with an eye for detail on structures being created to ensure a boost to Make in India initiatives.
Over the years, the West flourished in joint ventures with China. Intel, for example, invested $1.5 billion for a 20% stake in Tsinghua Unigroup to develop new smartphone chip technology. Cisco partnered with Chinese server and network company Inspur Electronic to develop IT infrastructure in a $100 million venture. In November last year, it was reported that the Indian government was open to allowing joint ventures with Chinese companies to boost the high-end electronic manufacturing sector in the country. So, will the re-entry of Chinese companies in India be only through joint ventures?
The re-entry of Chinese companies will have to be examined carefully from all points of view, whether they come in as joint ventures with India Inc. or they come in on their own. And that is, of course, dependent on the FDI regulations and also the risk of technology transfer, data transfer, the migration of intellectual property across borders. All of these issues will be important.
Earlier this year, the International Monetary Fund said that the Asia Pacific region will grow at 4.6% in 2023. It added that this growth will be largely led by two countries, India and China. Further, this region will contribute a significant 70% to the global growth. In such a scenario, how will business relations between the two companies turn out to be, given that few Chinese companies are re entering the Indian market?
The business relations with China in the coming months, I would like to see them improve, and I would like to see that become the basis for the Chinese to give up any territorial ambitions which are outside the absolutely well laid down and time tested agreements. For the first time, there is the possibility that business will lead geopolitics.
Strained diplomatic relations with China may continue, but some Chinese companies are being welcomed back to India. Experts say this is a good sign, but India must carefully monitor issues such as technology transfer and intellectual property rights.
Opposition parties, meanwhile, accuse the government of giving opaque statements on the border situation with China. Talking of politics, Congress recently swept the Karnataka polls while people hailed Rahul Gandhi and other party leaders for the victory. Those working tirelessly behind the scene remained behind the scenes. They prepare election strategies and play a vital role in any party's victory. Like Prashant Kishore is credited with BJP's rise and Sunil Kanugolu for Congress's recent win. But how do these poll strategists help parties? Tushar Verma and Debarga Sanyal explain. Elections are a massive exercise in India. During the previous general election in 2019, an unprecedented 50,000 crores was spent. It was more than what was spent during the US presidential and congressional races in 2016. Political parties start campaigning and building ground much before the Election Commission comes out with poll dates. Interestingly, how a political party performs or how a candidate performs is a carefully devised plan and strategy. Similar to corporations marketing their products, political parties also market their policies, promises, and candidates. To do this, they hire poll strategists. Sunil Kanugolu, a poll strategist, is being credited with the massive Congress win in the recent Karnataka elections. His team conducted surveys based on which the party selected candidates. The team also came up with popular campaign slogans such as PCM and 40% Sarkara. Interestingly, Kanugolu was working for BJP in the 2018 Karnataka elections. At the time, the Saffron Party had successfully won the state elections. In the last decade, India has seen the rise of many political strategy and campaign firms which employ poll strategists. So, how do these firms and poll strategists work?
We do, and our large share revenue comes out of corporate research. And our clients includes consumer companies likes of Levers, likes of P&G, and we do the brand track, we do the brand index, the consumer index, and we also have consumer sentiment index. For us, the same human being is consumer for corporates, citizen for government, and voter for politician. Human being is the same, and we try and understand the human being, how they make their choices, how they shift or change their choices or habits for that matter
During the election campaign, these firms employ a large number of people on field to carry out the plan and strategy. At the same time, others monitor developments from offices.
As far as team goes, we have about 1,500 field force and 300 at the back office. We do real-time research-led consultancy.
But why do political parties need poll strategists in the first place?
दूसरा side क्या है? There is a flood of information. People are struggling to get hold of the real authentic information. तो उसकी वजह से जो decision making है on the business side, वो बड़ी मुश्किल हो. तो जो फोकस करके जो डिसीजन मेकिंग करके segmentation is very important.
Today's poll strategy is not merely limited to rallies and speeches made by leaders. What was previously viewed as an informal work of the party cadres is now increasingly becoming more and more professional. A quick look at the career page of a leading political consultancy shows requirements of MBA graduates, statisticians, digital marketers, economic and political science experts, and many more. So, are elections in India becoming a professional exercise?
Both at the leadership level have realized and have started recognizing the need for bringing professionalism into political campaigning. Okay, they know that they need experts, they need young professionals to work with them day and night. How the cadre perceives us, how they get enthused about having professionals on board, how valuable they consider our inputs. So the more educated and the more progressive thoughts a cadre brings or a mid-level leadership brings on board, that is where the difference actually brings in. A set of standards and procedures you have to pull in 5-6 elements. You have to have data, you have to have other components, brand building of your leader. How we do it to an extent remains the same, but a lot of things gets regional around it.
Plenty of work that is done by poll strategists is done through conducting surveys and analyzing the data received. They monitor trends across several media to gauge perception of people. So, how are these surveys conducted and how do they help?
So there, to shape up those set of data models, you have to do a primary and a secondary research before you start the real research. And that's how you shape your questionnaire, your data. That's how you start modeling even your data set. Also, the issues, the local issues plays in how, like the women voters. What benefited Congress this time was the women empowerment scheme for every household. So that benefit which was going to the women and the messaging reached every household. These are something which we try to have an impact assessment on.
Poll strategists play a key role in filling the information gap and managing it. Election campaigns are increasingly becoming more professional and structured, and experts say that demand for political consultancy may increase. One of the BJP's poll plank has been its Make in India drive, and it is showing results too. India's domestic defense production soared past 1 trillion rupees in FY23, and share of defense companies have surged up to 160% in the past 1 year, as against a 14% jump in the S&P BSE Sensex. With India's indigenization theme gaining momentum, will the dream run continue in related stocks, or a correction is likely in the near term? Lavisha Darat brings you a detailed report.
India's indigenization theme, coupled with strong order books of companies operating in the defense sector, has infused strength in the related stocks. Over the past 1 year, shares of Mazagon Dock Shipbuilders, Hindustan Aeronautics, Bharat Dynamics, and Bharat Electronics have skyrocketed up to 160%, as against a 14% jump in the S&P BSE Sensex. Going ahead, the dream run in defense-related stocks analysts say is set to continue.
Government of India's focus on indigenization has resulted in a significant increase in contracts to Indian vendors who are specializing in defense equipment. The capital allocation for domestic procurement in FY24 has been raised to 75% versus 68% in FY23. Budget allocation for Indian Army is likely to pick up further in FY25. We expect sufficient opportunities for domestic companies in India going forward, and India defense story still has legs as revenue visibility remains high.
In a first, India's total value of defense production breached Rs 1 trillion mark in the fiscal year 2022-23 or FY23, up 12% year-on-year. Moreover, in the past 7 years, it saw a jump of over 44%. Besides, as of March 2022, the Defense Ministry had awarded contracts worth over 44,000 crore rupees. This order inflow, analysts believe, will grow further in the months ahead.
When we look at them fundamentally, we need to understand that they are producing, equipments, capital goods, which have a very longer term horizon when it comes to the delivery, and that's why the reported revenue and the long-term normalized revenue have to be seen differently. For that, one has to look at the order books. The order books are very, very strong for these companies. Anywhere from 3 times to 8 times of their current revenue is what the orders they have already secured, and the order books are actually growing very strongly if you look at last couple of years.
From an investment perspective, analysts advise investors to selectively buy defense stocks in case of any correction.
Key defense stocks can rise by say 12 to 15% from now.
However, as a lot of these stocks have already run up over the past few quarters, one needs to take individual view on buying on dips at safe entry levels.
Overall, though a near-term consolidation may be on cards, analysts remain bullish on India's defense story in the long run. On May 25, markets will react to minutes of the US FOMC meeting. Besides, Q4 results, crude oil prices, foreign flows and rupee movement will continue to guide trends.
Soft drinks industry too is gung-ho. It is raising a toast to a good season of sales thanks to the rising temperature. But should you be wary of opening those bottles and cans full of sweet drinks? Or think twice before relishing your favorite ice cream or even cookies? WHO believes so. But why? Tariq Ahmed explains. Did you know long-term consumption of those sugar alternatives in your kitchen can lead to increased risk of type 2 diabetes, cardiovascular diseases, and even mortality in adults? That's what a recent World Health Organization alert points at, based on recent findings on non-sugar sweeteners. Non-sugar sweeteners are low in calorie and are used to add sweetness to packaged and non-packaged food. Sugar substitutes like aspartame, saccharin, stevia, and its derivatives, S-sulfame, potassium, sucralose, neotame, advantame became popular because of their low caloric value, which is helpful in weight management. They are heavily marketed around the world and have been conceived as harmless. While most of these sugar substitutes are approved for consumption by the US FDA, the recent WHO guideline recommends against their use to control body weight. The evidence suggests prolonged use of non-sugar sweeteners doesn't contribute to reducing fat among children or adults. Instead, the potential effects of long-term use are risk of type 2 diabetes, CVDs, and premature death among adults. Artificial sweeteners do not help reduce the risk of weight-related illnesses either. The guidelines are based on randomized controlled trials in adults, children, and pregnant women. The study has done up to 10 years of follow-up on the individuals. To avoid extra calories while consuming packaged food, people choose packaged alternatives with non-caloric sweeteners and sugar substitutes. Recommending against the trend, WHO's Director for Nutrition and Food Safety, Francesco Branca, says people should consider taking more natural sweeteners through fruits or unsweetened food and beverages. A scientific panel of the Food Safety and Standards Authority of India is presently evaluating the WHO's guideline. While controlled trials have found that adding non-caloric sweeteners to diet resulted in decreases in body weight and BMI when compared with nothing, the long-term risk outweigh the short-term benefits. The guidelines concludes that non-sugar sweeteners are not essential dietary supplements and have no nutritional value.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
India's apex food regulator is also evaluating these WHO guidelines. Health experts, meanwhile, are now demanding that the FSSAI come out with labeling guidelines mentioning warnings on products containing the non-sugar sweeteners. That's all for today. For more news and analysis, please log on to business-standard.com. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.